Right, let's continue this story now, and we're going to talk about investment strategy with Sven Richter, who's the MD of Renaissance Asset Managers. Sven, thanks very much for joining us on Power Lunch today in Johannesburg. I mean, I just want to just carry on with what we were saying to that gentleman from Ernst & Young now, and just looking at something that came up on my screen in the last couple of hours. It says new World Bank President Jim Yong Kim heads to the Ivory Coast and South Africa next week on his first trip to Africa since taking the reins of the global development lender 2 months ago. Now he comes to Africa first. That's his first overseas trip. It just tells you something's going on here.
It was, just a few years back, I think the Premier and the Deputy Premier of China had made more trips to Africa in 1 year than they'd made anywhere else in the world. So it shows you that Africa really is on people's radar screens.
Yes, it is, and there's something from your desk that came across my desk as well. It says last week the Observer newspaper in the United Kingdom, it's the sort of weekend version of the Guardian newspaper, published a piece called "The Continent That Is Finally Daring to Dream," and it goes on to say for years we've been telling the same old stories from the African continent: poverty, disease, corruption, but of course that is still there in many cases, but it's just getting so much better. The question now, of course, is from an investment strategy point of view: how do we play it? How do we take advantage? How do we leverage this vast potential?
Well, I think, from our perspective, we need to be in the companies that are going to benefit from that. So for us, we like to see companies that are playing either in the consumer space or the financial space, which the financial space for us is almost consumer, because obviously these banks are going out and lending to people who previously were unbanked. We like to see the fast-moving consumer goods, and we also like to see companies doing sort of infrastructure development, so construction companies, and then of course telecommunications companies. So those are really where we see a lot of opportunity in Africa. And if you just look at things like phones, I mean, how many people have a phone now when they never had a phone, and how many people use these phones to leverage themselves up in terms of the economic chain? Because now they can transfer money, they can check and see where things are. In Kenya, you can speak to the doctor on the phone via their sort of the service that Safaricom has. So there's just so many things happening where we think there's opportunities to get in there and take advantage of that. Earlier on you were talking about foreign direct investment in Africa. It's gone up tremendously. Why has it gone up? Because people are seeing returns and they want to put their money where the returns are. But it's still actually a small fraction of the money that goes into the rest of the world. So while everything's been going really well for the last couple of years in Africa, we've still got not just, I think, 1 decade, but 2 or 3 decades of continued growth. And this is just the start of what's happening.
Exactly what I said to Mr. Nagatu. I mean, the fact is, I think the numbers he's throwing around, $250 billion here and there, it's just the tip of the iceberg. I mean, there's so much more to be done. I noticed a great story yesterday about Nigeria and a company that's going to invest a massive amount. I think it was the equivalent of $600 million in flour production because of the changing tastes in Nigeria and the booming population being very important in my eyes to any in investing in any country, and because of the changing taste, increasing fast food consumption, increasing bread and pasta consumption. There's all sorts of different areas. You didn't mention food, but does agriculture come onto your radar screen?
Yes, it does. I mean, agriculture is very important for us. And, the thing is, of course, whenever you mention a list of sectors you're in, there's always others that you can also be interested in. A lot of agriculture we play via fast-moving consumer goods, which for us is the food market, the flour mills of this world, the Dangote flours. And those are the companies that, as you say, are investing in more flour in Africa. Not just flour, though. As these fast food outlets open up, and 15 years ago you had Mr. Biggs, which was the only one. Now you've got your Chicken Republics, you've got your KFCs are coming in, you've got Nando's, which has tipped its sort of foot in the water there, and I think will continue, but obviously there's some challenges with Nando's in Nigeria. They also need chicken. They need the right size chickens because everyone has the right size chicken. They need their buns, they need their potatoes. All of those things are huge opportunities. And if you just speak to someone like ShopRite, who's busy rolling out in Africa, some of the challenges that they have when they open a store is that they don't have anyone to go to buy 10 dozen eggs every day, because since there was never a store in these smaller towns where 10 dozen eggs were sold, no one ever had the production capability to do 10 dozen eggs. So there wasn't really an ability for anyone to invest in a firm that did eggs or flour or whatever it was. Now, as sort of the whole chain develops, as the supermarkets develop and are able to sell it, as the people who supply the supermarkets develop, as the fast food outlets develop, you have all these opportunities that feed off each other, and that's where we find our investment opportunities within all these niches within the market.
It was about 5 years ago. I was speaking to the owner of a very well-known pie chain in South Africa, and he went to Lagos to sort of do a bit of a recce on what was going on up there, and came back with stories and said, this is absolutely fantastic, this is going to be a gold mine. Went back again, just couldn't do business because I suppose he was inexperienced. He didn't understand the way that this different geography worked, couldn't get the correct supplies, couldn't get the quality he wanted, and came back with his tail between his legs. But have things changed now? And how challenging is it for a company like that to go in there these days and actually set up a business with their South African experience?
Well, look, I think for any business, going into another country is always challenging. You don't understand the culture exactly, you don't understand how to do things. I mean, just look at the South African retailers that for many years went to Australia and really battled with understanding what was going on there. Just look at the Australian retailers that always eyed out the US market and went there and battled to enter into the US market. So it's never going to be easy for a South African firm to go to any other country in the world and understand it straight away. There's huge opportunities, but there's huge cultural challenges because you just don't understand the way things are done in those countries. But I think that probably the wiser course is something like what, for instance, a company like Tiger Brands is doing. They're going in, they're buying stakes in existing businesses. The advantage is that they are able to bring their expertise into those existing businesses, while the existing businesses are there, able to tell them something about what's happening in those countries. But there are other countries, for instance, a business called Inscore from Zimbabwe, which has rolled out very successfully. And in fact, one of their businesses is called Pie In. And when you drive through Nigeria and you see all the service stations, you see the signs, Pie In, Pizza In, they're all there and they're all busy making money at the moment.
So we've got to be creative, and we've got to be persistent, and we've got to be patient as firms going into the rest of Africa if we're a South African firm, but as investors as well, exactly the same thing. It might not be as easy as phoning up your broker and doing something on the JSE, but you've got to be persistent because I think the message is long term, this is going to reap really, really glamorous rewards.
Yes, I would say so. You must be persistent, you must understand the companies, you need to visit there often, you need to talk to the company that you're investing in, but you need to talk to everyone else that you can about the company you're investing in as well so you can understand it. And when we go there, we spend time in the offices of the companies. We also spend time in the evenings talking to sort of the managers in a more social setting because you understand a lot more and you learn about it. And that, I think, is very important. Whichever sort of firms you go with when you're investing in these new markets, is you need to know that the firm has done its homework, it understands what it's buying. And for us, we always want to buy quality companies because we think that if we buy a quality company, whatever might happen in the future, that company is going to be able to move through it, take advantage of it, and grow its business, and thus make us more money for our investors.